right, welcome everybody. For this video, I'm going to be talking about picking the correct key levels. Okay, so this is a very important topic that I get a lot of questions on personally. How to pick the correct key level. All right, and I'm going to kind of break that down how I do it today. All right, so one of the main ways of picking the correct key level is understanding that smart money moves on the high time frames. Okay, these banks, these institutions, all of the big players in the market, they're not trading hourly charts. They're not trading 15-minute charts. They're not trading 5-minute charts. They are positioning themselves on daily, weekly, monthly, quarterly, yearly, right? The higher time frame charts, that is where they're looking to position themselves, okay? So as being traders, and we want to be following what they're doing so we can catch the trends that they originate, we should be doing the exact same thing, all right? So what you should be focused on doing is looking at daily charts and above. All right, 80 to 90% of your chart time, you should be on a daily or above chart. Why is that? Well, because a daily and above chart gives us two things. Number one, it gives us direction and context to setups, right? So why is price going to this? And then number two, we can identify where are these price legs going to originate from, right? So if I'm bearish, I'm looking for daily, weekly, monthly key levels to take me to my bearish target, right? And in my experience, I've been trading for 5 years now. My bread and butter model and my bread and butter setups are always daily plus key levels, all right? They give the best reactions. They are the most consistent, okay? So that is what you should put your focus on, all right? Now, how to actually do this correctly, okay? And we can take these past few weeks, for example. If we look back to the first introductory video, everything starts with that. Everything starts with direction, and then where's the wick going to form towards that direction, right? This is how we identify where is that wick going to form, right? So if you have a preconceived idea that we are likely to be bearish, what you want to do is you always want to start from a higher time frame. Because again, I want you guys to imprint into your brain the higher time frames are much more important than the lower time frames. All right? If I wanted to short inside of this candle, I'd ask myself, is there any monthly key levels? Not really. I go to a weekly chart. Is there any weekly key levels? Yes. Where's the weekly key levels in here? Well, if I'm looking to trade this week, okay, May 25th, what do we have? We have a gap, and we have an order block. Why is this an order block? It purged a high. Okay, I go to a daily chart. What does a daily chart have? We have a gap overlapping with this key level, okay? And then we go down to an hourly, which is our intra-week entry, and how we identify a weekly candle, all right? And we can see we stabbed into these key levels, they rejected, and we expanded, all right? So understanding why is it that we're picking these key levels? Because the higher time frame is what controls these markets, right? Let's say that you didn't take this and you waited for this next week, right? Which would be start here and end here, all right? Well, what high time frame key levels from this week could we have traded? Well, we created an order block, right? So Monday opened, delivered lower, and created an order block. And then look what this week tapped before delivering lower. Was the order block, right? And if we go to a lower time frame here, this is an hourly turtle soup, 8 o'clock on Tuesday, all right? The same thing if we go back into price. Let's say you were bullish here off of current market profile. Right? When we drop into a weekly gap, again, using high time frame key levels, top-down approach, this weekly gap is also what? coinciding with a breaker or a weekly order block, daily breaker, we can see here, what do we get? We get a soup. Okay. The same way that this next week, if we mark the rejection block and we go to an hourly chart, what do we see? We see a low being put in, we see a range, a stab into this low inside London session, and an expansion. Okay. Now I'm showing you guys these for two reasons. Number one, these are trades that I took, and number two, repetition. Okay. The more and more that you see these high time frame key levels creating these expansions like this, the more and more you're going to be able to trust it. All right. Now, because price has different phases, in different phases of price, I will trade different types of key levels. And let me explain that for a second. So the market always moves, where is it? Here it is. In ranges to expansions to ranges to expansions. Okay. This is how the market moves. All right. Now, whenever the market is in a higher time frame range, I'm always requiring a daily or higher key level for this manipulation to form an expansion in. All right. So let's say, here, for example, we're in a higher time frame range. For me to trade the next higher time frame expansion, or for me to even expect for price to start expanding, I need a new higher time frame level to sponsor that move. In this case, it was the weekly gap. All right. Same with here. We hit a target. We start ranging. Okay. For me to expect this next week to deliver higher again, I need a daily level or higher to sponsor that move, which again, we got right here. All right. Now, this is not the only ways to pick key levels. Okay. I pick daily plus key levels when price is ranging and I need a manipulation, right? So if we haven't put in a manipulation for the week, for the month, I am seeking these higher time frame key levels to form that sponsorship so that the higher time frame can be in alignment and that it can expand. All right. But that doesn't mean you always have to trade this, because if we go back to this up here, in the manipulation phase of price, you always want to seek these higher time frame levels. In the expansionary phase of price, you can start seeking lower time frame levels. And I'll show you why. If you go to a 4-hour chart here, and you go to just a random key level in the middle of nowhere, this gap, there's no confluence to why this gap should hold. And if you trade it, you're trading it as a pattern. And to be consistent, you have to be avoiding patterns. Okay? The same way that if you were to trade, I don't know, literally any random key level, this gap. Okay? If you're just trading these key levels at random, then the likelihood of them working out and the consistency behind them is going to be random as well. Right? Your equity curve is going to show that you're trading randomly. Okay? But look at the confluence and context here. If I'm bullish on a weekly and daily chart, I know that for the next higher time frame expansion, like I showed you guys, you have to understand that it has to be sponsored by a higher time frame key level. Okay? In this instance, we have a weekly gap. Now, when these swing points form, we expect these to hold, right? In a weekly bullish market profile, a stop run inside of a weekly gap we expect to hold. Now, when these weekly swing points form, the key levels created off of these swing points have confluence to why they should hold, right? If I expect this low to hold and this low creates a 4-hour order block, well, that 4-hour order block should hold, right? Or if this low creates a 4-hour breaker, that 4-hour breaker should hold. Okay? This is how we trade continuation entries. All right? So let me mark out this weekly candle. right? So this is this weekly candle on a 4-hour chart, open to close. When we know that the manipulation of the week has been put in, sponsored by a higher time frame key level on Thursday, we know that the key levels that this creates should hold until a target is met. Meaning, when this low creates a 4-hour order block, this 4-hour order block is now high probability because it was created off of a weekly gap. Notice the difference here versus the difference of picking a random 4-hour order block in here, right? Or a random 4-hour level in here. There's a big difference between that and looking at it through this lens. The same way that when this expansion here creates a 4-hour gap coinciding with a breaker, that it makes sense why this should hold rather than, again, randomly picking any random key level you see on a chart. Okay? There's context to this because this expansion here has been sponsored by a weekly level. Therefore, the 4-hour levels or hourly levels that this weekly level creates have context to them holding. Okay? The same way that if we seek entries in this next week following the same idea, until a target is met, of course. When we get this turtle soup inside of that daily rejection block, and this daily rejection block creates a 4-hour order block, again, this 4-hour order block has context to it. It's not just a random order block you're marking on a chart and wondering why it doesn't work. This order block was created off of a daily level. That daily level had a stop run inside of it. Okay? This is how that we can understand what key levels should we actually be taking and stop pattern trading, random order blocks or random fair value gaps. Okay? Everything that you do should be high time frame down, top down. Okay? Whenever you're looking at analysis, start on the highest time frame and work your way down. Whenever you're looking at key levels, start on the highest time frame, work your way down. Right? And when you're looking to actually enter inside of these levels, think of this. Think of what phase of price are we in. If we have put in a manipulation inside of a high time frame level, then you can seek key levels that this creates. If we met a target and we start ranging, well, then your next level or your next setup should be forming inside of a daily, weekly, monthly key level, right? Maybe you missed that. Maybe you missed the daily, weekly level that creates the next expansion. Well, then if this creates a 4-hour level, that 4-hour level is now high probability, right? This is how price moves. Ranges, manipulations, expansions. Understanding which phase of price you are in is how you can understand which key levels you should be even looking to trade, right? If price is in a range, and I know since we took out this high, I shouldn't seek any more levels until a daily or weekly or monthly. That's when people pattern trade these gaps and they get wrecked. Or pattern trade these order blocks and they get wrecked, right? That is why it is so important to understand, number one, order flow, and number two, how to trade that order flow, right? Which levels are you looking at? When do you look at 4-hour levels? When do you look at daily, weekly, monthly, right? It's all under the umbrella of this. It's all under the idea of ranging, manipulating, expanding. Ranging, manipulating, expanding, right? This is all price ever does. When do we range? Well, when a target's met or when time comes to an end, right? What do I mean? If a target is met and it's rejected, we know to wait and seek for a new level. If the end of a candle, let's say low of week is on a Tuesday, and on a Thursday we start pulling back into the range, okay, well a new range could form. Why? Because candles print open, high, low, close. Here's a range, right? This is how you understand which levels it is to trade. All you have to ask yourself, which phase of price are we in? Are we in a phase where a range is likely to form, in which I need a new manipulation level? Or are you looking to trade a continuation of a manipulation level in the expansion phase? And then that's when you can seek these lower time frame levels on a 4-hour, hourly, okay? That's how you understand which levels to pick, okay? And when you combine this idea here within the introductory video where you're looking to trade a weekly candle, the weekly candle should be sponsored here, right? If I just turn this into a weekly candle like this, and this weekly candle then gets turned into daily candles, which days of the week do you think you should trade here? Probably Wednesday and Thursday. Avoid the range, right? So all these things all these things work together in unison, right? And it's important to understand this because I think a lot of people where they get it wrong is they trade key levels as a pattern and not as a logic, right? Just because there's a fair value gap or order block doesn't mean it's going to hold, right? But when there's an order block sponsored off of a weekly gap and weekly bullish market profile on a Wednesday after a Tuesday low week, there's context there, there's logic there, right? Consistent trading is based off of a logic, not patterns, right? Patterns will not get you very far. The pattern is used once the logic is identified, all right? So it's something to note when you're looking to understand where to actually position yourselves in these markets and where not to position yourselves in these markets, okay? Now, that is all for today's video. I hope this can kind of help clear up a little bit about key levels, and I will catch you guys in the next one.